And today we're going to set the precedence, the foundation for how to optimize your EFC and get more money, become more eligible for financial aid, and get more money to help you pay for college and less that you pay out of your own pockets. So we're going to start by talking about assets specifically. What's up, people? Hey, this is Josh with the Grade Above College Planning. Thanks for checking us out. As I always say, if you like the information that you're receiving, please like this video, subscribe to our channel so you can get the latest information that we provide on a consistent basis. Also, don't forget to share it with someone that you feel may benefit from this information. We know that we're not the only resource out there, but we just want to be one of the resources that you use to help you plan, prepare, and reduce your out-of-pocket expenses for college. And today we're going to set the precedence, the foundation for how to optimize your EFC and get more money, become more eligible for financial aid, and get more money to help you pay for college and less that you pay out of your own pockets. So we're going to start by talking about assets specifically. When it comes to EFC and your finances, the two things that are most important regarding your finances are your income and your assets. So when it comes to your assets, unlike your income, assets matter at the time of applying for FAFSA or financial aid. So the day that you apply, your assets are accounted for, whereas your income is prior year. We'll talk once again more about income later on, but assets are real time, the balances when you actually apply for financial aid. Here we go, assets. Okay, so one of the cool things about the older you are as a parent is that there's such a thing called an asset protection allowance. There's a certain threshold that you as a parent can have based on your age, the age of the oldest parent, before they're calculated as a part of your expected family contribution. If the threshold of the asset protection allowance based on your age in this particular year is $20,000 and you have $100,000 in accessible assets, the first $20,000 of that $100,000 won't be counted when it comes to your expected family contribution. The older you are, the more, the bigger that threshold might be. If you can kind of see a chart of your age and the asset protection allowance based on this specific year, that information typically updates every July 1st as far as the new requirements for the asset protection allowance. So back in 2009, 2010, the asset protection allowance for a 42-year-old family, or 42-year-old parent, I'll say, back then was right around 54, let's call it 54,000. And today, that same family at 42 years old, the asset protection allowance is right around just shy of $12,000. That's more of a 75% decrease in the assets that you're allowed to have before they're assessed. So a couple of assets that matter based on the federal methodology are, rental property, any real estate that you have that you don't currently occupy, any bank accounts, cash, savings accounts, money markets, CDs, stocks, or mutual funds held outside of a retirement account. Those types of assets can matter and count against you. 529 college savings programs, those also count and matter when it comes to your EFC. Now, a few assets that don't matter, that are not counted, are things such as your typical retirement accounts, like your 401k, your 403b, 457, any kind of pension plan or program that you have at work. Your current property that you occupy and live in, your primary residence, is not accounted for. So there's a few things that we can talk about, we will talk about as far as optimizing your EFC, but those are a few assets that matter. Just going back to your retirement accounts, one thing is really interesting to know is your 401k is not counted when it comes to your EFC, but the contributions you make will be counted, and they're typically added back as income. So it's more on the income side of things, but your 401k as an asset, retirement asset, qualified account, does not count towards your EFC, or is not assessed as an asset. How it affects you or impacts your EFC, as a parent, it affects you 5 to 6%. So as a student, as a dependent student, any assets held in your name are impact your EFC by about 20%. As an independent student, same thing, it's right around 20%, but it's based on your age and the fact that if you're married or not. If you have children, it can be right around 7%. So there's certain things and calculations that matter based on dependent status. We talked about that as well in another video. But as a parent, in most cases, you're looking at about 5.65%. And as a student, you're looking at about 20% as far as what kind of impact those assets are gonna have on your EFC. So if you want to know specific information and you want to get an estimate of where you stand based on the assets that you have, feel free to contact us or reach out to us directly. It's always good to get an idea of where you stand today. So once again, this is Josh with A Grade Above College Planning. Reach out to us via email at info@agradeabovecp.com. Check out our website at agradeabovecp.com. Stay tuned for more information, and we'll talk to you soon. Thank you.